As far as I can tell from searching around on Google and other things, there's no strategic stockpile of silver at all in the United States. And
Yeah.
part of that stockpile was previously owned by the military because silver had a military use as well, has a military use.
Yeah.
Anyway, they've got rid of it. So if they rebuild this stockpile, I guess they'll build it slowly, but they won't start buying until this draft paper has finished its consultation period. So the consultation period on the draft strategic minerals lasts until the 25th of September. And it's possible that after that date, they will start to build their stockpile. But they can't build it that quickly because 2 billion ounces is like 2 years' supply of silver. All of that silver's needed for the electronics industry anyway.
Metals Focus forecasts that while we will see record silver prices over the next 5 years, mine supply growth is likely to remain modest, with only minimal increases globally. The U.S. Department of the Interior has proposed adding silver to its list of critical minerals. The list, established in 2017, guides federal strategy, investment, and mine permitting decisions. The inclusion of silver on the list of critical minerals underscores the growing importance of the metal and could signal worries about the lack of domestic supply. As the world focuses on physical gold, silver's low relative prices are also set to return to the spotlight. The silver market is approximately 200 times smaller than the gold market, and silver remains relatively inexpensive compared to gold. Physical silver supplies are also dwindling. For the first time since the 1980s, the U.S. government has just classified silver as a strategic mineral. Prominent wealth manager Clive Thompson notes that this implies a need to rebuild a national stockpile that was depleted decades ago. However, any new government buying will intensify the deficit and unleash a significant price spike. Analysts forecast another supply deficit in 2025. Sagging supply is likely one of the factors driving the decision to include silver on the list of critical minerals. U.S. silver mine output was up by about 6% in 2024. The U.S. produced about 1,100 tons of metal. However, output has generally been flat over the last 5 years. While reflecting on geopolitics, Clive Thompson highlights that the U.S. previously did not consider silver critical. However, as the dollar loses its reserve status and global trade becomes increasingly fragmented, strategic self-reliance is becoming increasingly urgent. From a technical perspective, Thompson believes a significant move could be on the horizon for silver and gold miners. Thompson notes that the basic materials sector was the best performing sector in August, considered a clear sign that the smart money is already moving. Before we dive into Clive Thompson's sharp insights from his latest interview with veteran investor MarioInnecco, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I don't know how many people have seen this, but the United States has declared that silver is now a strategic mineral. This came out in an announcement on the 25th of August in the form of a draft paper. And it basically, I'm just trying to see if I can have a look at that. But basically, I can't. It's Department of the Interior.
Yeah.
Let's just go here, share.
And they added, I think, platinum to it too.
Share.
Yeah, I'm glad you mentioned that because I saw that too, but I forgot to mention.
I think, are you on the right page now?
Yeah, you can see it. Yeah.
So it says Department of the Interior releases draft 2025 list of critical minerals, and they've added potash, silicon, copper, and silver, and rhenium and lead. These are new ones, and they removed arsenic. I don't know why they removed arsenic, but anyway, they have. Now, putting silver down as a strategic mineral means that they have to build a strategic stockpile. The United States, I'll just stop sharing that. Anyone who wants to look at this article in full can go to the Department of the Interior and look up the release, but I'll stop sharing that. So it means they'll have to build a stockpile. There's no point in having something as a strategic mineral unless you have a stockpile of it. Now, the United States used to have a stockpile back in the 1950s and 60s of silver, and they sold it all off in the early 1980s. So as far as I can tell from searching around on Google and other things, there's no strategic stockpile of silver at all in the United States. And part of that stockpile was previously owned by the military because silver had a military use as well, has a military use. Anyway, they've got rid of it. The amount they used to own was 2 billion, roughly over 2 billion ounces of silver. That's what they used to have in their stockpile, which is a bit more than 2 years mining supply. So we've got the deficit of demand exceeding supply. That's the large increase in demand. I don't know why they've got this spike up, because I don't see that spike on the numbers I was looking at. But the increase in demand is coming mainly from electronics. And of course, electronics are very important to the United States because of the big electronics industry and defense. So if they rebuild this stockpile, I guess they'll build it slowly, but they won't start buying until this draft paper has finished its consultation period. So the consultation period on the draft strategic minerals lasts until the 25th of September. And it's possible that after that date, they will start to build their stockpile. But they can't build it that quickly because 2 billion ounces is 2 years' supply of silver. All of that silver's needed for the electronics industry anyway. Back in I think it was the 60s, the US handed over part of their silver stockpile to what's called the US National Defense Stockpile, which allegedly holds 0 ounces of silver now, but they handed over. Presumably all that silver has been used in making weapons since then. But from what I can read, that stockpile is completely depleted. So they'd have to buy, if they got back to their old levels, 2.1 billion ounces of silver. We're mining about 900 million ounces of silver a year. That figure is actually down to 800 and something million now because the amount of silver coming out of the ground is less, and the demand, as you can see, is going up. Now, one of the things which is quite interesting, if you look at the Silver Institute, where they say that silver's going, they're estimating that in the current year, 200 million ounces of silver will go into private holdings of bars and coins, 200 million ounces. If you do the maths on that, it means that on the entire planet, that's only 1 ounce coin per 45 people. So basically, it's telling us that if their numbers are right, that 200 million ounces get sold to the public in the form of coins or bars, it's telling us that literally nobody in the world is interested in silver. Or, if everyone who was a buyer bought a coin and only bought 1 coin instead of a stockpile of 10 or 100 as people do, and I've had people writing me saying they've been buying monster boxes, which I think are 500 coins or 5,000 coins. I don't know how they're really big things.
I think it's 500 ounces, the monster box. Yeah.
So, imagine if everybody who was a buyer of silver bought 1 ounce, there'd only be 1 in 45 people who'd get that at that level. Can you imagine if that doubles to 1 in 20 or something like that?
What was I going to say as well, Clive? We saw, and this is not something I agree with, but I guess what Trump and the U.S. administration, what they're thinking is that if we're going to compete with China and other countries, we got to kind of join them a little bit. So we saw recently the U.S. took a 10% stake in Intel. And why wouldn't maybe the U.S. take a stake in silver miners or gold miners for that matter? So I think, the silver sector, the gold sector, but especially silver has a lot of potential, not just buying bullion, but buying the companies that mine silver.Maybe you could talk about the fact that there are not too many primary silver producers out there, right?
That's right. I'm in the middle. I'm 95% done on a study of all the silver miners. I've been working on this for many weeks, Mario, because I'm bringing a video out in hopefully the coming days, maybe even today. I don't know. It's a difficult one to do because it's very difficult to research each miner individually, and you can't use AI because AI is all over. You can ask 8 AIs and they'll give you 8 different answers, so you've got to do it manually. But the amount of silver miners, it's something like 200 billion out there. The amount of gold miners is something like 600 billion. So collectively, it's less than a trillion. And if you think about it, some of these biggest companies in America, like Nvidia, Microsoft, Apple, they're all worth 3 or 4 trillion each. So any one of these companies could buy the entire precious metal sector, mining sector, several times over if they were to turn into cash and buy the sector, and you could buy it at the current price. So these sectors, the mining sector is very, very small. But if you look at what happened in the last month of August, I haven't got it for the mining sector, but I've got the basic materials sector, which includes mining companies generally. That was the best performing sector in the month of August so far, this 30 days, 1 month performance.
In the interview, MarioInnecco advises to keep an eye on what central banks are actually doing. Since 2022, they've been on a historic gold buying spree, averaging over 1,000 tons annually. This is the real story of the recent gold rally, as foreign central banks now hold more gold than U.S. treasuries. A silent war for monetary dominance is being waged, and the battleground is the U.S. dollar. According to Clive Thompson, China's quiet shift into gold is a strategic move to reduce reliance without risking U.S. retaliation. According to an analysis published by the Financial Times, China's holdings of these securities have fallen to levels below those of the UK, a development unthinkable just over a decade ago. The move comes amid punitive trade tariffs, sanctions, and diplomatic tensions, and signals that Beijing is redesigning its strategy to protect assets against political and economic risks. Economists point out that in the past, dollars raised from exports were recycled into the purchase of treasury bonds, strengthening U.S. debt. Now, Beijing is directing a significant portion of this capital toward gold reserves and tangible assets, such as strategic mineral mines, considered safer against unilateral measures from Washington. Let's get back to the interview.
People are going to the stock market, but the smart money, if you want to call it, the central banks, they've been loading up on gold, especially since 2022, over 1,000 tons a year. This year, I think the first half they bought like 410 tons, so it slowed down a bit. But prior to 2022, the average for the previous decade was only about 400, 500 tons a year. And Clive, I've got some really interesting news here, especially for us who have been telling people that they need to have their own like central bank and accumulate gold, because we're going to continue, as you said, seeing government spending, inflation, deficit spending. But for the first time since 1996, we're kind of back on a de facto gold standard. And people might say, what are you talking about? Well, according to data here, Tavi Costa, who I've had on the channel several times, he pointed out yesterday, foreign central banks now officially hold more gold than U.S. treasuries for the first time since 1996. Let that sink in. If you think this buying streak is ending, just look at what happened in the 1970s. This is likely the beginning of one of the most significant global rebalancings we have experienced in recent history. So there you go. And the data comes from Bloomberg, and I think he must get this from World Gold Council and stuff like that. And Clive, some people might argue, well, and you said that as well before we started out, it's because the gold price is going up. Yeah, and I agree. And maybe also because government bond prices or treasury prices are going down. But be as it may, you can't really measure treasuries in metric tons. So you got to measure it somehow. And I would argue that if you look here, it started to pick up these holdings also when central banks started buying massively, net buying since 2022. Yeah, I think this is going to continue.
Well, it's certainly a fact that central banks have been net buyers and continue to be net buyers. The one I tend to watch is China, although they weren't actually the biggest net buyer of gold. But what's quite interesting, when I looked at the Chinese numbers, because I've broken them down, I see that month after month, their holdings of treasuries do not rise, but their holdings of gold, in terms of absolute number of ounces, does rise. So they're buying ounces every month, They're not buying treasuries, which are fairly steady, and the percentage exposure they've got in 2 or 3 years to gold has gone from something like 3% to 6% of their reserves. Maybe it's getting on for 7 now. So they basically doubled their exposure to gold in partly because of the price rise, but partly because they've been buying every month. And, I think that's a trend that's going to continue. There's a reluctance to increase their holdings of treasuries. And I think around the world, central banks are wondering whether they should continue to hold these treasuries. But on the other hand, they're kind of nervous of what would happen if we dump them. Is this going to be seen as an act of war against America? And are they going to suddenly impose massive tariffs on us because we decided to unload our treasuries? We're here in Switzerland now. I don't know if you saw the comment by Trump, but basically he's demanding that Switzerland pay him a huge, maybe not pay him, but basically pay a bribe to get the tariffs down. And the comment he's making is Switzerland's got 600 billion of US securities. Well, we're obviously, on the one hand, that could be used as a bribe to get the tariffs down, but I don't think the Swiss are going to do that. But on the other hand, there must be a certain reluctance to carry on holding US securities, including treasuries. But does anybody dare to get rid of them? Would that be seen as an act of war or retaliation?
So Trump wants Switzerland to pay the U.S. how much and with what?
This is doing the rounds in Europe. One of the German newspapers has basically got their hands on the phone call between Trump and the Prime Minister of Switzerland, and the gist of it is basically he wants Switzerland to make a monetary gesture towards the United States to get the tariffs down, which is not going to happen, by the way.
No, Clive. There are people, of course, who argue as well that treasuries have been in a bear market, and that's another reason why there's more gold holdings. But I had a look at Clive, and I used ChatGPT because it's quicker. But you still have to ask the right question, of course, and know what you're talking about. I asked them what the average maturity of foreign holdings of U.S. Treasury, central bank foreign holdings of U.S. Treasury was, and they told me it was 6 years. So I took the 5-year note future, which is pretty close in maturity, and this is the price. So since September 2022, it's basically been flat if you look at it. So yeah, it's not because the price of treasuries have gone down. Even though for different countries, they might have different maturities and they might hold more, but it would take too long. I could do the Chinese holdings, Japanese holdings, but what I'm trying to say, treasuries have been pretty steady in the last 3 years or so, especially this middle of the curve here, intermediate maturities. And I think it's quite historic, and I think the era of holding dollars as reserves is quickly waning. I mean, I don't mean to say people won't have some dollars as reserves, but the major reserve currency or asset is going to be gold. And it has always been, Clive, because the last 40, 50 years has been an aberration. But I've got here a chart of the long bond, the T-bond future, which is more a maturity of around 20 to 30 years. And the price of gold in long bonds is near all-time highs. And I think that's going to continue as well.
While the U.S. has historically maintained the world's largest gold reserves, this position is increasingly questioned by financial analysts. Significant gold accumulation by other nations, particularly China and Russia, has shifted the global balance of monetary power. HSBC also said a weaker US dollar is positive for silver. At the same time, ongoing debates over the future direction of interest rate cuts and central bank policies could also boost silver's price. Ongoing discussion highlights that gold and silver are quietly being remonetized as governments stockpile them and supplies tighten. The big question is, when the public catches on, how high could prices go? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.